In this video we're going to have a look at Nestle, ticker symbol NSRGY, as requested here. If you have any stock video requests, let me know in the comments. Founded in 1866, Nestle is today the world's biggest food and beverage company. They have so many brands that they have to have it categorized A to Z. It's highly likely that you would have had at least one of their products. The diverse portfolio spans 190 countries. The stock is down 2.15% over the last 12 months. So far it's up 2.46% this year. The stock has had a 52-week high of 131.64 and low of 106.81. Over 5 years it is up 23.45%. Over the last couple of the decades it has performed very well. Since 1995 it's up 1,041%. The yield is currently 2.93%, paying $3.35 annually, with a compound annual growth rate of 4.63% over 5 years, 3% over 3 years and 5.17% over the trailing 12 months. The payout ratio is a bit on the high side, which is something to monitor, at 80%. It's usually around 62-65%. Now let's look at the finances. Nestle have a market cap of $289.77 billion. This makes Nestle the world's 34th most valuable company by market cap. Revenue has steadily been on the rise since 2016, which is exactly what you want to see. Nestle's liabilities have increased a lot, up to $105.4 billion. A company's total liabilities is the sum of all current and non-current debts and obligations. The company's assets are in a strong position though. This is a sum of all current and non-current assets, such as inventories, cash and cash equivalents, properties and equipment. Nestle have slowly been buying back shares but still have $2.6 billion outstanding. Looking at Nestle's full year results, the company achieved strong organic sales of 7.2%, driven by pricing of 7.5% and slightly negative retail growth of -0.3%. The underlying trading operating profit margin increased. The underlying earnings per share grew by 8.4%. The free cash flow increased from $3.8 billion to $10.4 billion, mainly due to significant reduction in working capital, and the dividends increased for the 29th consecutive year running. The company confirmed its 2025 midterm targets of mid-single-digit organic sales growth and underlying trading operating profit margin from 17.5% to 18.5%. Let's have a quick look at how it's performed against the S&P. If you'd invested $10,000 10 years ago and reinvested the dividends, you would have a total return of 93.23%, ending with a value investment of $19,321. The S&P would have given you 222.46% return with $32,000. Over 20 years, it has performed a lot better, beating the S&P, giving a 602.98% return with a huge $70,000. Compared to $62,500 with the S&P. Let's see what the analysts are forecasting. Tip ranks have an average price target of $126.13, 17.32% upside based on 12. Market beat has an average price target of $124, 10.33% upside from where we are today based on 5. And Zacks have an average buy price of $143.50, 27.68% upside from where we are today based on 2. From the targets and market beat tip ranks and Zacks, an average price between the three is $131.21. If we have a look at value investing and see what the intrinsic value calculations are, based on the discounted cash flow model, it has a fair price of $76.98, which is 22.7% downside, and the dividend discount model has a fair price of $104.73, which is 5.2% upside. If we take an average of the analyst expectations and the investing models, that would give us a buy price of $104.30. With a 10% margin of safety, that would be $93.87. So the overall verdict, Nestle has a wide economic moat, meaning it has a sustainable competitive advantage over its rivals thanks to its strong brands, innovation, scale and distribution. I think it's a fantastic stock and I will be looking to add at the right price, of course. As usual, thanks for watching. If you've enjoyed the video, please like and subscribe.